Firstly, is that SMB lending really is changing dramatically. That demand for a highly digitized, low-friction environment is not going away, it's accelerating. And finding ways of delivering that to your deposit relationships as well as your lending relationships is exceedingly important. McKinsey did a study towards the latter end of 2020 talking about digital trends in the pandemic. They found that the propensity of an individual consumer in their personal lives to use a digitally native experience for more than 80% of their interactions, not going to 100, but 80%. That increased threefold in 1 year. There was 10 years of digital adoption in 2020. Now, we have known this for a long time in our personal lives as consumers. What I want to leave you with today as far as this goes is that in small business, the requirements are a lot more like consumer than they are like corporate or commercial. The second is transaction data. This really is providing new opportunities, and as I referenced a moment ago, it really does change the way we look at risk from the standpoint of SMB borrowing. There's been extensive research over the last few years. There was a report done with Bank for International Settlements in partnership with Lending Club and Funding Circle that established this as the importance of transaction data. And more recently, research that Lendio participated in using PPP data with NYU, a Stern professor there, who talked about the importance not just for indicating propensity to repay and likelihood of default, but also about the importance from the standpoint of financial inclusion. So there is plenty of research about the importance of doing this, and we're excited to have more case studies. Ray, maybe you can talk a little bit about your experience here, and in particular the product cross-sell, upsell, which is such an important topic right now, given the banking mini crisis that we've had over the last few months.
Yeah, absolutely. So I think for us, one of the great things about transactional data is that it helps us understand how these small business owners operate. You gather data on how they operate, and then at the same time, this allows you to really understand their business model a little bit better. And then after that, you sort of shift the mentality from being another lender to more serving as a consultant for this particular small business. And so I think that adds a lot of value. I think the data helps to, again, understand when perhaps the business is going to be experiencing working capital issues, temporary cash flow imbalances, seasonality factors, or even when they're just ready to graduate into another type of loan that is more suitable for them. So I think on the one side, it gives you an opportunity to leverage additional lending opportunities. But I think the other beauty of this, and I think it's especially important in today's environment when liquidity is such a hot topic, transactional data it helps you improve the stickiness of those deposits. See, our customers are rewarded by using their deposit accounts because we can evaluate their transactions. So the use of transactions essentially allows a customer to continue to benefit from products like this that are very convenient, ease of access, but through good deposit behavior. So I think from that standpoint, it really increases customer loyalty and just the stickiness of the deposits. And I think it's just another great tool in terms of sustainable, low-cost funds moving forward. And I think it's just another tool in the arsenal, right?